I wanted to talk a little bit about, basically we were going to look at some longer term charts and try to figure out what we're doing for next month. And also just touch a little bit on what to expect for summer trading. It's a little bit different. It's obviously winter in the southern hemisphere. It's summer here in the United States, Europe, Asia. And things trade a little bit differently. So we'll start off with the summer. It'll take me 2 minutes to sort of cover how things trade a little bit differently. So the thinking is that there happens to be, the last few years, there happens to be a huge amount of liquidity in the market. So the prevalence of summer trading, or thin trading, so to speak, is much less than it used to be. All right, and I still see it definitely the case around Christmas time. I really think that I don't think there's anything wrong trading-wise in taking off from about the 20th of December to about the 7th of January. Christmas really is a little bit of a rough time to trade, but summer can also be, there could be some summer doldrums too. All right, and one thing I did want to show you was this. We've been looking at this at FxBootcamp. And it's a pretty interesting thing, and no more interesting than today. Here is a euro dollar for the last. Here's a euro dollar for the last 10 weeks, and this is the case obviously throughout the currency pairs. But here is London Open, basically. All right, these candles represent. These candles or not candles, these little graphs here. Everybody can see and hear me properly, I guess. I'm taking it. These little graphs here represent the relative volatility per time of day. All right, and what's interesting to me is how sort of Asia picks up volatility here. And I say Asia, we're talking about later on in Asia, frankly. This is 5 a.m. London, 6, 7, and 8. And it's interesting that the volatility picks up. Going into those hours, but then as London opens, we're seeing this drastic drop-off in volatility. Why is that? Your guess is as good as mine. Right? London opens and it's like the market hits pause. Okay? And then, we get towards 7:30, 8 o'clock. We get towards 7:30, 8 o'clock New York, and boom, off it goes again. It's like the world is waiting. It's like they trading Asia and then waiting for New York money to come in. Okay, now this isn't a representation of the direction of things, but I just thought it's interesting here that, if you're looking at your trade journal on an intraday basis, you really want to be making the bulk of your trades here. I'm not saying that there aren't good opportunities outside of that. I'm just saying that consistently speaking, the injection of volatility is happening. It used to be Colin, but that's changed. And I can extrapolate this information out some. But we can make this 16 weeks, 4 months. Refresh the page up. Right? There's 4 months, and it's less, it's less profound, but definitely a drop-off, and then that same sort of spike up as it gets towards sort of that 7:30, 8 o'clock level. Yeah, we'll look at the pound in a minute. So my question is, my recommendation is, if you have to pick a specific time in your trading, certainly if you're going to take the bulk of your entries, you should be looking right around that area. When did the euro this was the Euro plan today. We're going to long 29.45 looking for 130.30. You know, what time is this? What time specifically is this? It's right around that level. Right around, it's right around sort of that 7:30, 8 o'clock mark, isn't it? It's pretty interesting. Now, I'm not saying that, once again, I'm not saying that there's not opportunities outside of that. But, you know, if you're going to concentrate on the market, certainly concentrate on it for that hour, yeah? Okay, now, what's the difference in summer trading? And I'm talking about, for me, summer trading constitutes sort of the second to third week of June through about the first week of August. All right? And the difference is not, you don't really not get moves. All right, the moves are going to still happen. You're still going to get your trends. Things are still going to move well. And like I said, everybody's got so much, volume into the market these days that, there's so much liquidity in the market these days that I have a hard time believing we're not going to have a good summer. But what you tend to get is some overshoots. You know, so if you're trying to, for instance, short the 30 to 40 level, all right. If you're trying to short the 30 to 40 level, if it goes to 70, don't be surprised. You know, and a level isn't broken, you might wick a level by 20 or 30 pips and then actually hold it. So my advice for that sort of 5 to 6 week period is maybe lower your lot size a little bit, expand your stops a touch. Because you don't want to get wicked. You can get wicked around during thin markets. So that's really the only major difference that summer holds over some of these others. And, you know, if we go back to that chart a minute, here it is. You know, like I said, concentrate your trading on that window of sort of 7:30, 8 o'clock New York time. You know, here's the Swissy. Look at how, you know, you get a little spike up here. This is the last month. But London opens, volatility drops, 7:38 kicks in New York, and you're hot for 4 hours. Okay? So this isn't rocket surgery as to when you want to conduct the bulk of your trading on an intraday basis. And it's like any other thing. You had support at that major market open, you're going up. You had resistance, you're coming down. Keep that in mind.